Hey, thanks for tuning in. In this video, we're doing a weekend review for the week ending February 25th, 2022. We're looking at a chart of the S&P 500. This is a monthly chart. I have highlighted down here all the PPO bear crosses, and I put an arrow over each of them. If you also just focused on the ones where they ultimately gave up the 10 as well, you could remove a few more. Like this one and this one here. And what you'll find is there's pretty much only one example, which was really at the start of the run, September 2011, where the pain ended in about a month, and price still went lower. In reality, what I like to look for when I get these types of bearish crosses is I want to compare it to the previous high in momentum and price and ask, are we higher or lower? And we're definitely higher. So we don't really have a divergence anywhere, which is good. But you also then look to see how far are we from the zero line. And in this particular case, we're at the 10 level. So, this was at 8 and it went all the way back down to 2. And that took about 2 years to do this little correction. And so, and if you notice, in this particular cycle, you had a pretty big, sizable correction here, very muted, then very big. It's possible that since we just had a big one, we get a muted. That's kind of what happens in all, that whole Elliott wave rule of alternation. But it's just symmetry. It's not enough to make a buy-sell decision. It's just an awareness. So the other thing that you want to be aware of is this is a rising 20, right? And the slope is very high. You want to look at the fact that we haven't touched the 20 in over a year. And if they go through and break the lows again next month, they will hit the 20. Or if price goes sideways, the 20 will rise up to price. One of two is going to happen. And then you're going to learn real quick whether or not this is supply or demand. The last two times they sliced right through it and went to the 40. It's down here at 350. So the way they closed this candle is going to tell us a lot, right? Are we giving up the 10 or not? And is the 5 going to cross below the 10? It's just some basic moving average signals. Other things that I look at, what type of pattern do you see, right? On the daily and weekly, I am seeing some broadening out where prices got higher and then couldn't keep going and then immediately broke the low of the previous. So that's giving me like here's a high, we broke the high. Here's a low, we broke the low. So that's telling me price is broadening. And there's two ways you can draw this, right? You should generally do something like that and connect the lows. But also, we're broadening out back here with lower lows and then break higher. So it doesn't really matter. They're all subjective anyways. You want to identify your objective signals and help reduce the false positives of the subjective. Or I said that backwards. Another thing I'm looking at here, ascending channel breakdown. So it's definitely been tested twice. Right, we're below the 20, we're below the 40. These are bad things, but what's more important is the slope of the 40 and the slope of the 20. All right. Here, at every one of these corrections, while they've felt awful if you sat through them, and I don't recommend that, the slope of the 20 starts to go down after all the damage is done. But it's also a testament to how short of a duration on the weekly each of these corrections was. And at this point, to me, the market's been in a correction since November 8th. It's possible you could go back and say things like IWM kind of peaked back in January or February of 2021. IYT peaked in May. And SPY goes last. And so where we are now is back at the zero line on the weekly. So it's possible that, once she comes down in here, most of the damage is done. It's also possible that the demand at the 80 is enough. We do have a reversal here. We do have some volume on the weekly, but it's less volume than we had on the 24th low. Another thing that I take note of is price closed above that 420 level. So you got to keep zooming in to see what's going on. I mean, you're obviously in a downtrend. Obviously, right? If it wasn't clear. The slope of the 10 is down. The 40 is sloping down, about to cross below the 200. But price has recaptured one of these, this key volume shelf point of control here, and is likely going to come up and try to close near the high of the session on Monday and repair these monthly charts. That's my gut feeling. And the reason I say that is price closed above the 10 and that point of control. Didn't have to do that. Supply and demand, that's where it landed. And you do have this positive divergence down here on SPY. So what do I mean by that? We have a big low, big pivot, open here, come all the way down here, close on the high. Lots of volume, and then ultimately come up and try to rally from this level. So that's a key level. The low in momentum came here at 429.45, and price went all the way down to 410.64, and we have a higher momentum, right? Lower oscillator. So it's possible that this is a bullish divergence. We'll take a look at IWM. Closed the week right at resistance. But this is, if it's not obvious to anyone, this is a very, very strong downtrend. The momentum is confirming it. It's possible here that you've got a same positive divergence like you had on SPY. But I don't really know any other way to mark this except this now. So we just had a 5-wave move down. What I'm looking at is something like this. Right after the March meeting is when they're going to launch. I think they will do something like this to just go sideways into the meeting. So this is where, playing the daily charts and the hourly charts is really going to generate a lot more alpha than the weekly charts. Simply just anticipating a lot of sideways action. Right, and if you remove a lot of this, you can just draw a rectangle, and this is balance, right? So what's the market doing? It's probably going to decline in volume within this range before a decision's made. It doesn't have to have that steep of a B, right? It could be 50% of the A. It could be something like this. Doesn't even have to be a huge move. It can just be a flat. Something like that. Doesn't have to be a zigzag. So we'll find out. We'll know on the hourly, right? First, like if in fact this is a low and this does look impulsive higher for sure. Like you can just see the hourly higher low pattern is still intact, has not broken, right? And you can just do this yourself, but I'll do a little bit here. 187.92, 190.17, 191.51. So that's what I mean by the higher low pattern. Still intact. Go back here. It broke, broke, broke. Bears win. So, a lot more supply overhead for this move higher versus this move higher. And you can see you still have a divergence here too. Positive momentum divergence. This will still take time, right? I would expect to find supply up here at a minimum at this gap fill. Right, so to start the week, I'm anticipating a gap up into this area, 204, something like that. That's your stone cold sell. Looking for a pullback into something like this general area. And the moving average is down here. And so this is how you can start to get a little bit more aggressive. And generally, if you follow some objective momentum signal, if you identify that, back test it, you'll find that these hourly, while the market is in a correction, your hourly buy sell calls are just going to yield way better than when, like this time last year, the market was just printing new all-time highs every day. So for me, a focus on the hourly is going to be a priority, and the daily as my trailing stop. So I'm gonna definitely give these things room to run. And if you look at something like the 4 hour, for example, like you are getting this, this bottom look, obvious double bottom setup, and the volume is confirming it, right? So we have more here than we did here. So this is kind of what you want to see. And the Elliott wave structure is telling me that a 5-wave impulse move lower likely just completed, or a zigzag. Something like this is still possible, right? On the weekly, I still see that as a valid setup. So it doesn't necessarily have to be a zigzag. Doesn't necessarily have to be a 5-wave move lower. I'm just giving you what I see and how I view it. I will tell you right now, this weekly chart looks very nice. And it will look a lot better if she can get back in this balance area that we've had up here for a long time. This was the look above and fail setup. The target was here to cover. Most volume ever, right? More than COVID lows right here. Now we had a retest of that low. And you've had distribution since the 29th. Very obvious distribution, right? Going back to the 8th. So in my opinion, this is the chart to watch. We'll take a look at QQQ. Right? Just like SPY broke down to this channel. We've lost, so neg 101. Neg 122. So there is no longer a divergence here. This is a hidden bearish divergence, no longer a bullish divergence. What do I mean? This was the low in price, right? 164.93. The low in momentum was neg 113. The low in price, 318.26. The low in momentum, neg 122. So what does this do? Right, it certainly opens up a much larger correction. Right, this to me looks like a 5-wave move lower, which means I'd be expecting something like this, and then something like that. All right, and that's just kind of how I'm viewing this one playing out, and the correctional will be over around the midterms. Like this isn't going, again, like the monthlies that I talked about earlier, this isn't going to resolve itself. This here it's even more predominant, right? Unless SPY can close above 367.74. Not SPY, Qs close above 367.74. That's another $22 higher. Then you'll have two closes below the 10, plus this cross lower, PPO already at 12. I mean, I expect it to at least come down here, if not all the way down here. Right? And what are you seeing? Maybe for the first time since 2009, this trend that started, you're going to really close below the 200. We'll see. Each time they did, it was only one close below, immediate recapture. That's what you look for, right? A close below, and then the algos buy it all back up. Close back below, buy it back up. Close below, buy it back up. And then rip away. Close below, buy it up, retest. Right? This is a trend. And the Qs haven't touched 335 in a long time. The assumption is that the trend continues. The assumption isn't the trend breaks, right? It's that it continues. But when you get these types of crosses like this, even if it does hold, you had a lot more pain. Right? This was just the very beginning. This is going to continue for a while. Even if you come back up, set a new high, you find more sellers type of scenario. And you know, ultimately, A, B, C. These things come in threes. That's how they get you. By the third one, you're ready to just throw in the towel. And then that's when the impulse move comes every freaking time. A, B, C, ready to go. A, B, C, ready to go. So just something to keep in mind when you get this PPO cross. The assumption is you go back to test the level that it tried to before, right? The higher low. And if you break that higher low, then you go to the one before, and that becomes the target. You have an obvious broadening formation here, right? A, B, C, D. Could be an E up here before they come back down. I could be completely wrong in any of that. Right? It's very subjective. So what are we waiting for? We're waiting for these signals to fire. The momentum alerts. And when they do, they give you a clear level that you can trade against. I think what's likely to happen here is something more like a left shoulder, head, right shoulder, and then a break of this pattern. And that will align around the fundamental news coming in the middle of March. So you have about 2 more weeks where it's not going to be easy to trade. They're going to make you think that they're going to go a lot higher, then they're going to pull the rug, then they're going to make you think they're going to go a lot lower, and then they're going to go head back to all-time highs. And this is what the market does. It does this all the time. This time it's just going to use the whole Ukraine situation as the excuse, just like it used COVID as the excuse. So take a look at gold. Still above a rising 10, but this is a reversal candle on volume. The assumption is you're not going to close above this high, and this is a lower high on GLD. That is a reversal candle on GLD, ABC structure. So what I now start to see is something like this, ABC up, and then you get the mirror move lower down to here. And then you get the next move up in gold. Again, I could be wrong, but that's how I see this market. Let's take a look at TLT. Right, this is coming down to 127. There is no way about it. And only when it breaks 133, will we know if there's a divergence. That's it. Until she can get above the 5, the assumption is she's heading to the destination, which is down here. Let's take a look at Bitcoin. I know a lot of you guys like that. We did have some action here. I'm not convinced until she comes down to the 29K level. That being said, this could still be a 1, 2, 3, 4, 5. ABC, 1, 2, and we're starting the next leg higher. It's also possible this could be a triangle, which is what I've kind of contested here. Maybe just an expanding triangle, and confused the most people for the longest time. It is impossible to tell. All I can tell you is we're in a correction. And the best way to view this is balance and price. Did a look above and fail? And when you do that, the target is down here. So that's why I keep saying this is the target, right? When this hits, I'll be interested in Bitcoin. And maybe it hits after the March decision. Until then, I'm on the sidelines. And the further you zoom out, we had that PPO at 51. Now we're doing that whole reset to zero thing. Right? We talk about this all the time. It's just the momentum has to leave in order for it to start over again. Right? And when you cross, what happens? The assumption is you go back to test. So I'm looking for this to come back to 10 and then a curl up. And until that happens, it's just an avoid. Now, if they can get back above the high 48.12, we've got something else to talk about. But I see the high probability bet is to remain in this downtrend as price heads towards the destination of a 29K to 27K. Let's talk about SMH. So this one back, still holding this uptrend, still in this downtrend. This, to me, looks like distribution. And that's right, I remember it did this one way over here. So, just giving you guys some levels to look at. This is the 68. Holding here is very healthy. But I don't see this as an impulse. Maybe 1, 2, 3, 4, 5. Okay, but I don't like this look at all. Because I could also say it looks something like just an ABC, and now we're going back lower, some correction like that. So WXY, who knows? I don't know. I also talked a lot about this symmetry here, this look above and go. I mean, look at that symmetry. So, when you look at these things, that's kind of what I'm looking for. Like the move was hit, right? All this consolidation, this fake, hey, we're going, we're not going, we're actually going to do it. Like that's how they do it every time. Fake you out here, fake you out down here, then they do the move. But the market profile approach, right, and the trend following approach is as long as you're above the 200, just remain in the trend. The odds are it's going to keep going. Well, now that's being called into question. The market profile approach would be, hey, we were in balance, we consolidated, and as long as price remained above 258.88, you had this concept of look above and go targeting up here at around 311. Well, I've been talking about 311 on SMH this whole time. And we finally got it here. And if you had the patience for it, you were rewarded. Right? So that's just kind of how you have to look at the market. There's no absolutes, and it never does it when you expect it to. But the pattern is still present. And you have to align that pattern with the fundamentals. And right now the fundamentals are a rate hike and how much. And do we call that into question? Fundamentals are how bad is inflation? Is it peaking? Is it not? What does that mean for everything else? That's all part of that rate hike discussion. And then obviously the stuff that's happening in Ukraine. What do these economic sanctions on a country do? Do people view it positively? Do they view it negatively? Again, we're not trying to have an opinion. We're just trying to look at what's happening and tie it to a pattern and align it with the crowd psychology. And we talk about sentiment all the time. The sentiment on the 24th of January was the washout. That was the flush. That was the headlines, $1 trillion in puts bought by retail. All of that. That was all liquidation. That was every retail long throwing in the towel. and then coming back to this level and retesting, right? This is your classic double bottom setup, but psychologically, by the time you get here, everyone's capitulating. Everyone's done, right? Because you just sat through all of this, and you're all the way down here again. What's that mean? You're done, right? Psychologically, oh man, this is just one up day. We've seen up days before. They just come to set new lows, right? That's all your recent memory, and then you impose this confirmation bias. Well, what's an easier way to do this? Let's just look at the chart. Let's get rid of everything off the chart, except some trend lines and a rectangle, right? The market loves to stay in balance. This is the balance area. So what's the high probability bet? It's that you remain in the balance area for as long as the market will allow. And what happens when you get to the bottom? It's a buy, and when you get to the top, it's a sell. And that the trend in between, right? It's possible here that you have a broadening formation. We talk about these all the time. But when you get to 290, it's a sell. When you get to this trend line, it's a sell. And when you get down here, it's a buy. If price were to come back down here to 250s, strong buy. If price is below this level, what happens? Look below and go. Targeting 214. All right, so this is how I use geometry and symmetry in my trading. And yeah, that pretty much sums it up. I mean, we'll look at the monthly here real quick, just like we did in all the other charts. I pointed this one out back in November, December. This is a bearish Harami reversal pattern. When it closed below, that confirmed the reversal. And that implies that there are 3 to 5 more candles in the direction of the reversal. This being 2, 3, 4, 5, like May. And it also calls in to line this uptrend, right? So still above here is fine, no big deal. But closing below this level here, the 249 low, is a big deal. And if price can close green here, you would have an outside inside reversal of this reversal, right? And that's kind of how this works. So this outside candle, did they close below 249.36? Negative. So we can't confirm it. That's why you can get real bearish on one candle, but you have to have it confirm to get that 3 to 5 trend, that move that everyone anticipates they're betting on, instead of just waiting for it to happen and then hopping on board for the 3 to 4 candles. Most traders want to say, oh, I want to get all 5 to 6. Well, that's 6 months in SMH. And if you're right, great. But there's lots of opportunity on SMH in the meantime, right? And right here, like, this is a move you could have easily played. You could have bought this dip, sold up here, looked to buy here, got stopped out, and then add back. I mean, there's lots of ways you could play this stuff and be more active. You could do the same thing on the daily. But here, it's like you're starting to get closer to the sell, right? So, I mean, I like these. I like SMH. I always do. It just doesn't look as clean as IWM. You know, and like in looking at NVIDIA, this doesn't look that great. I mean, it's similar to IWM. It's like the same exact setup, right? This double bottom. So it's possible, but this is a declining 10. Still, you know, on the monthly, getting that PPO cross. Right? So it's like they all look the same. Now this looks like a reversal setup for IWM on the monthly. So we'll see here. The 200 level on IWM is a big one. I just wanted to run through a couple more and then get out of here. It's already long in the tooth. XLE. right? Look at this. Is this a breakout or is this a bull trap? I don't know. We'll see how they close this candle. Like, I'm not convinced XLE is done going higher. XLE still is the best buy and hold ETF, but I will say on the daily, they broke the uptrend, right? So this is not done going lower on the daily. And that could morph into something a little bit more ugly here. But they're up here at this POC, which is either where they're going to distribute to retail, which is how that works, or they're going to base for a long time before they march higher. XLF still in the ascending channel. I don't like this anymore. We got to see what this rate hike decision does. I think they're setting up for a big disappointment. I do think this is a reversal setup. So this is an outside bearish reversal. It's a doji. It just looks ominous. Then we go inside doji, and then what? What are we going to do? I don't like the look of this anymore. This to me is lining up to look like a distribution pattern. And if you look at this, it's basically imbalance. Sell up here, buy down here. That's about it. So something to kind of, and this whole gap down, gap up, gap down, gap up, like this is just so much risk to hold overnight. No real trend. It's just an avoid. And that kind of like wraps it up. I think PENN's another one that I was watching real closely. I love this inverse head and shoulders pattern. Left, head, right. Now we're breaking above the neckline. This one looks real good. Potential risk of a broadening here, but we'll see how it plays out. The real breakout comes above this 53 level here. So I don't know if that's going to happen or not, but if it does, it targets this high here, $70. So in reality, any of these dips have been for buying, and the hourly chart is the chart to play. I mean, again, like these things that are going sideways, it's tough to have a weekly perspective on. If they break above, you get yourself that look above and go, then you hold. No problem. But use the hourlies to scale in and to scale out, no doubt. And that being said, we'll wrap it up with the monthly here. Look at this monthly reset, right? 40 to 5, and could still hold this divergence. All right, I like this one a lot. I like the structure. It has the ABC that we want to see into the former resistance, right? This was all resistance. Now it's confirmed demand. And what you want to see is launch away. You do have 53.37, 53.36, 51.71. So like right now, you still have this downtrend, and we don't have enough on the monthly to say that we have a reversal. Still below the 5, still below everything. But on the weekly, 50.54, if they close above 50.54, it's an outside bullish reversal. And the bull cross on the weekly after resetting all the way down here. So this is something to take note of. This is definitely a bottoming pattern. And the measured move is roughly, like I keep saying, that $70 to $75 range. And this is the next best swing trade, in my opinion. And if you then look at historically, what is this aligned with? This is historically aligned with IWM, right? The peak in March, then has done nothing since. So that tells me that to watch it to see if IWM and other things that are positively correlated to IWM start to outperform things like QQQ and SPY. And so that's kind of my thesis here moving forward. All right, if you like the content, hit the like button, subscribe. We'll see you in the next video.